In other business news, a healthy set of financial results has been reported by the Dipula Income Fund with a 9% rise in revenue and a property income increase at 6%. That's for the 6 months ended in February. The diversified firm, which owns a 9.8 billion rand portfolio of 155 retail, office, industrial as well as residential assets, has attributed this to growth in the rural and township markets, particularly in the province of Gauteng. It's also noted that these gains are owed to improved operational as well as financial metrics, along with the rollout of new solar initiatives. Dipula CEO Izak Petersen speaks to us about all these developments. Thank you so much for your time. Positive results in a tough market. Talk to us about how you got to this point of achievement, but in particular, the development that you are seeing in the rural as well as township markets.
Well, thank you very much, and greetings to everybody watching. We're very pleased with the set of results. Push revenue up 9%. I think it's a combination of things that's led to this healthy set of results. Things are tough. I think just listening to some of the snippets from your interview earlier on, rising unemployment. We've had shortages of energy and all that, and a whole lot of lots of negative news in the market. But we're playing the cards we dealt, and I think we're pushing our teams very hard to lease space. I think some of the key drivers of these results was decreasing vacancies across the portfolio, and then most importantly, we pushed our cost lines lower. So running more efficient operations has been critical in driving our numbers, and I suppose just keeping a positive mindset and trying to find revenue streams, alternative revenue streams where we previously weren't looking, and I suppose keeping those shopping centers trading throughout load shedding times. You'll see that we've allocated a fair amount of capital into alternative energy, for the upcoming 6 months. About 50 million rand to generate about 5.3 kilowatt peak of sun energy.
Of course, the context in this regard is quite important. An elevated interest rate environment, along with slow economic growth and the pressure that we are seeing on consumers as well as load shedding. It can't be easy to be operating in this climate. Talk to us about the near-term outlook then, because it has had an effect on some of the gains that you could have made.
Yeah, look, our sense is that, I think you'd have seen from your numbers that our retail turnovers were up about 14% year on year. And we service the lower end of the market, which is obviously affected by the negative economic circumstances in the country at the moment. I mean, every time you mention unemployment, every time you mention retrenchments, that market segment is affected. But I mean, this market segment is also the market segment that spends money on non-discretionary items, such as basic food and basic everything. So literally, you'd probably see a trend where people shop down during these tough times, and during good times, the same market segment will also get employed and will shop more. So it does help, from a Dipula perspective, that we are covering that market segment. And I suppose the other big thing is just ensuring that we are fully aware of where the trend might be affected the most. So in other words, tenant these shopping centers and these properties with tenants that are defensive in nature.
Would you then say, based on that, we are still slightly far from getting to pre-COVID levels in the market that you operate?
I think that offices are recovering very nicely. I mean, obviously, the offices were the most affected during COVID. We also happen to be underweight offices at this stage. But I mean, we are seeing more people return to the office rather than the other way around, and or spending more time in the office, compared to about 2-3 years ago. So I mean, there's positive trends there. I mean, obviously, rental levels would still be under pressure because there's still oversupply in that market segment. But I mean, it's definitely better than 2 years ago. It's always about the base you're coming from. And I think offices got knocked down quite badly during the worst of times. So I wouldn't say that the market has recovered fully, since COVID, because I think there are other sort of headwinds that's working towards that, interest rates being one of them, and obviously just the global economic situation being a very difficult one to navigate. But I think as management teams, we're here to work through all market conditions. And I mean, we don't wake up every morning saying to our teams, give up. We wake up every morning saying to our teams, find a way and find a different way, and let's try and make this work. Both from a point of view of obviously making a decent return for our shareholders, but most importantly, making sure that we provide relevant services to our stakeholders, which include the consumer at the end of the day.
On that note, I must ask, with the upcoming elections, is there an expectation of an improved economic and business environment that would at least offer that glimmer of hope, depending on the outcome of the vote?
Well, I choose to assume yes, because I mean, the opposite is not to be imagined. But I think that every South African out there is hoping for the same thing that I'm hoping for, that, regardless of who wins the election, I think South Africa should always come first. And I assume that every single politician and every single voter out there will use their vote in a way that thinks about SA first.
As a parting shot, you earlier alluded and gave reaction slightly to the quarterly labour force survey that has seen South Africa's unemployment rate increase once again. Your contribution within the market that you are actively operating, where are you plugging those gaps, in particular youth unemployment, where artisans are required?
Yeah, Dipula makes quite a big impact. I think every time we either extend a shopping center or office building or residential building or build a new one, there's new employment numbers or employment figures being contributed towards. But most importantly, I mean, property is an asset class that you work throughout the life of the asset class. So, I mean, we've got lots of maintenance teams that are run by youth, and we've got security companies that are run by locals and youth. And women. So, I mean, property is definitely one of those areas where, you can make a difference at the lowest of levels and highest of levels, because we also use young engineers and well-experienced engineers. So we do make our small contribution, and we've got a internship going where every year we put a few graduates through this internship program, and we are employed them ourselves after that, or we send them out in the world, and there isn't a single intern that's walked through these doors here that hasn't found permanent employment after doing that. So we're making our contribution.
Thank you so much for your input this afternoon. Dipula Income Fund CEO there, Izak Petersen, talking to us about their fairly good results in a very tough climate, given the South African landscape of economics and business.